The PwC Assets and Wealth Management European Regulatory Team is really happy to present to you this video that summarizes key regulation affecting assets and wealth management across Europe.
In this video, we will be covering European regulations and directives such as Solvency II, UCITS 5, Authorities Inspection, PRIIPS KID, Fintech, MIFID II and CMU.
Well, let's start with a topic that should already be in place since January, Solvency II. Joachim, can you tell us what you see on the market?
What we see is that the insurance companies are already asking for it, but the asset managers did not have prepared. I don't see a problem for the ordinary securities funds. There it's easy win, but especially with regard to more complex assets, we will see questions about qualifying infrastructure and some other SCR minimizing topics, and the asset managers aren't there yet. Ken, where I'm in an investor country, was waiting for Solvency II implementation. Was the timetable there a struggle?
As you know, UCITS 5 came into effect on March 18th. The 3 months leading up to the effective date were very busy for depositories as they renegotiated their depository agreements with clients and also ensured that they had the appropriate procedures in place to comply with the additional obligations under the directive. Now that ESMA has issued their final remuneration guidelines, albeit with an open question to the European Commission in relation to the application of the proportionality provisions, asset managers can get on with the job of implementing the required remuneration policies and transparency requirements in time for the 1 January 2017 deadline. The third and often overlooked leg of the UCITS 5 directive relates to the harmonisation of sanctions regimes and penalties, including the introduction of turnover-based penalties and a whistleblower regime. Heavy sanctions regimes under UCITS 5 make asset managers much more nervous about the national authorities' inspections and results thereof. Laurent, what do you see as the trend here?
Indeed, with the new sanction regime of UCITS 5 and the fact that FMD has been in place for more than a year, we are clearly seeing renewed and stronger attention by national supervisors on the way asset managers are implementing and following regulations. We have to bear in mind two important factors. On the one hand, the asset management sector is a focus of greater scrutiny by prudential regulators because of the famous and recurring issue about shadow banking. On the other hand, asset managers are core to the Capital Market Union initiative. In this context, the asset managers need to be ready and are in fact already seeing more intensive and intrusive inspection by their respective regulators, for which they need to be thoroughly prepared. Benjamin, will it be easier and safer with the PRIIPS?
That's a good question indeed. First of all, the KID under PRIIPS standard is including a section called How Can I Complain? In that section, the manufacturer of the product sold will have to specify the steps to be followed for lodging a complaint. On top of the different administrative sanctions, the range of administrative fines can go up to 5 million euro or up to 3% of the total turnover of the legal entity. Sanction is then a dimension to consider, and the EU regulators are looking at the quality of the KID. Taking into account that the first deadline for the production of KID under the PRIIPS standards is the end of this year, and the fact that the key sections, I'm referring here to the risk, charges and performance sections, are using approaches and parameters that are totally new for the financial industry, it's more than time to start working on it. Based on the different feedback received from the EU regulators, we don't think that the deadline for PRIIPS will be extended. I guess that postponed deadline for MIFID II has been welcomed by assets and wealth managers. Is that right, Claire?
Whilst a delay is welcome to give firms longer to comply, firms should not use this as an opportunity to pause. There's much to do within this time. We are approaching further clarity from ESMA and the Commission with the publication of a delegated directive and the forthcoming delegated regulations. Local regulatory implementation details will follow as we go through 2016. Firms need to ensure they understand the details of the requirements, but should also take this time to consider any strategic decisions they may need to take in terms of your clients, products and markets. Natalie, So far we've been discussing a lot about the challenges for asset managers, but do you see opportunities also in regulation? CMU maybe?
Yes, indeed. Capital Market Union Action Plan is the roadmap plan of the European Commission to create a strong capital market union in Europe in order to develop and ease the financing of the European economy and infrastructure. Under this plan, several initiatives are foreseen to ease European venture capital funds. The Commission is also working with ESMA on loan origination funds. And last, by no means least, the European Commission is determined to remove cross-barrier to fund distribution across Europe. Asset management has a key role to play here, so let's get ready to respond to this consultation that is about to be issued. But at the same time, when EU is looking to strengthen its capital market, one of its key players is considering leaving the EU. Andrew, what could be the impact for assets and wealth managers if Brexit takes place?
The European referendum actually presents a real challenge for our clients. The actual outcome of the vote is at the moment very unclear, and there are a whole load of external factors that could impact it, as wide-ranging as the migrant crisis, the recent Panama paper leaks, through to, I'm told, some kind of range of football matches that are happening later this year. The reality also is in the event of an outvote, the outcome of that is unclear. Is this going to be some kind of Norwegian or Swiss model, or actually is this going to be a full out arrangement? And on top of that, after we've gone through the election, or the referendum points, there will of course be a 2-year negotiation period. Again, that presents more uncertainty for firms. What our clients are seeing, however, is market volatility, and we have a regulator that's already encouraging some clients to stress test those changes and impacts on their business. Some of our more advanced clients are actually beginning to look at things like an analysis of the perimeter arrangements for where they're conducting their activities today, where they're making use of passports, and also actually where their clients are situated. On top of that, some of the very advanced clients are even going one stage beyond. So thinking about the wider economic impact, actually thinking about the people in their businesses, be that EU migrants or people from outside of Europe and the impact on those people and their visas and so on. And also, finally, the impact on their end customers. Are their customers' businesses operating as a going concern, and will they have the same consumption that they would have had before?
We hope that you have enjoyed this video
and that you find it informative.
If you would like to know more about any particular topic,
do not hesitate to contact any asset and wealth management regulatory team member.
As a team, we intend to update you with similar video in the future.
So stay tuned!